Hello and welcome to Fin24. Today we are speaking to Neale Petersen, founder of the property magazine, The Real Estate Investor. Hi Neale.
Hi there, Mashvika.
Neale, there seems to be definite trends within the residential property market. There seems to be a lot of talk about the upswing. There seems to be a lot of positivity about what is happening in the residential property market. But there also seems to be quite a bit of inconsistency in these trends. What are your thoughts on that?
Absolutely, Mashvika. I think you hit it right on the head. I think if you're an estate agent operating particularly in the Western Cape and sort of in the high net worth areas, particularly the Atlantic seaboard, and also in areas where properties are probably be anything from about 6 million rand plus, tends to be showing that there's a bit of a property boom. Sales are on the up. I've heard numbers of something like 150% up on last year, but that's on sales. That's not on the price of the properties. So, the estate agents have had a very lean period for a very, very long time. And so obviously I think the perception from their side is, wow, the property boom is back, sales are up, the market is buoyant again.
Yeah, the agents seem to be on quite a high. There's a buzz. There's
Absolutely.
a buzz that hasn't been there for a while.
No, but if you dig a little bit deeper, it's not really like that. And I just want to expand a little bit on the other areas nationally. Areas like Hyde Park has also done really well in Johannesburg. And also Mshlanga, Mshloti areas are also up 30, 40, 50%. So I think anything from like the 3 million mark up, if we start looking a little bit closer why it is, you find that in the Atlantic seaboard it tends to be a lot of people from Africa, Angola, a lot of people are doing mining and involved in contracts and doing works there. I've got a lot of cash, also local people who have cashed in on the stock market from companies that are invested offshore that put money back into property. So, and that's what's driving the market. There's also Germans, there's people from the UK and various other markets. So they're all cash deals. They're not financed by banks. So I think that's a very important point to make out there. So the banks say that they're trying to loosen, their restrictions in terms of and limitations, but it's still tough out there. There's still too many people with bad credit records. So if we start looking a little bit underneath what's actually really going on, the banks are still not giving credit. And the reason is simply that the credit criteria is just really so tough. The number of people that are in a bad debt situation is really high.
And here we're getting bad debt situations not from yesterday, looking back to the 2006, 2007 period from which people have still not recovered.
They have not recovered. And banks were very open at that stage to give loans, and they gave it to all and sundry. If I walked in, to my hairdresser said to me they bought 2 buy-to-let properties, and then they knew really nothing about the market. The banks are really giving loans to everybody, and of course we're now paying the price. And the problem is it's not getting better. And we're also impacted by what happens overseas, the American market in particular. And there've also been ups and downs in that market. They're also sitting with a massive debt. I think the US government sitting with $17 trillion US dollars debt. It's massive. And so they recovered slightly, and but going forward, it's still very, very
So if we're looking at the high-end sector of the market, there things seem to be very, very rosy.
Yeah.
What about the lower end?
Well, what's happening there is that because people can't get loans from the bank, the mortgage bonds, what's actually happening is that they have to turn into renters. They have no alternative but to rent properties. So what that is also doing is driving the rental market, and we also have a major shortage of rental properties in South Africa. But at the same time, there's a lot of people in distress. Unemployment is still very high. It's over 25% in South Africa. And so of that, there's still a lot of defaulters in that as well. So we find people jumping, the default rate according to TPN, we monitor that kind of stuff, is around about 15% if we had to take as a national average. So that, which is quite high as a default rate for renters. So the new modern renter is somebody that wants to probably have a short-term rent, wants to move on. They're not really interested in investing in property, one, because they can't. The affordability and the credit criteria from the bank to qualify on the loan is really, really tough. And to their lifestyle, they just want to move on. They're kind of in a mobile situation. They want a little bit more diversity from life to move from one area to the next. They change jobs a lot. They're more tech savvy and that kind of stuff. So very different, and they're kind of saying, well, why should we invest? you know, they can't really see the benefits, and especially when you see the crash of what happened from, you know, 2008 onwards, they don't want to be a victim of that.